All right, picture this. It's August 5th, 2026, and the entire chip sector is just absolutely on fire today. AMD shares, they're surging over 9%, making them one of the absolute biggest gainers on the Nasdaq right now. We're talking about a stock trading at roughly $528. So what exactly is under the hood of this massive surge? Well, in today's explainer, we're going to unpack the recent earnings, the ongoing AI boom, and zero in on exactly where Wall Street is placing its billion-dollar bets.
Now, to really wrap our heads around today's action, we've kind of got to look backward for a second. 170%. That is an absolute rocket ship of a run-up over the last 12 months. It's been totally driven by this extreme market enthusiasm for AI hardware, and this massive climb actually catapulted the company to an all-time high of $584.73 just recently on June 30th.
But hey, the market rarely moves in a straight line forever, right? Following that massive high, the broader AI trade kind of took a breather. It hit AMD with a near 12% drop in July alone. People were actively taking profits and de-risking their portfolios ahead of the upcoming earnings report. So the central tension going into August was pretty clear. Is this AI party just pausing to catch its breath, or are we looking at a fundamental warning sign?
Okay, let's dive into this. Here's our roadmap. First, we'll look at the AI stock roller coaster, then Q2 earnings and expectations. After that, data center and Helios, followed by billion-dollar customer wins. Then we hit Epoch Venice and agentic AI, and finally, valuation, worth the price? Section 1, the AI stock roller coaster. And keep in mind, the broader Philadelphia Semiconductor Index is actually up over 6% today, which is giving AMD some really strong macro tailwinds at the moment. Just look at the whiplash on this timeline. We hit that staggering $584 high at the end of June, right? And then, boom, followed by a sharp 12% drop in July on those valuation fears. And now, today, August 5th, a massive 9% surge back up to around $528. The multi-billion-dollar question every single investor is asking right now is, are we seeing a brand new leg up, or is this just a dead cat bounce? Moving to Section 2, Q2 earnings and expectations. Because to figure out if this is a bounce or a true breakout, we've got to look past the share price and dig into the actual financial performance they reported after the August 4th closing bell. When we look at the consensus estimates from FactSet and Bloomberg, the expectations were, well, they were simply sky high. Revenue was expected to jump from $7.7 billion to $11.3 billion. That is a 47% year-over-year growth. And earnings per share expected to explode from 48 cents to $1.62, which is a staggering 237% increase. I mean, really think about that for a second. AMD essentially had to double its top line in exactly 12 months just to meet Wall Street's expectations.
But, as benchmark analyst Cody Acree pointed out, when estimates are this aggressively clustered, a simple earnings beat, that's kind of old news. The market is hyper-focused on the future now. They want to see that September quarter guidance, they want to see gross margins holding around their 56% guide, and crucially, they want to know the rollout timing for their new AI system, Helios.
Section 3, data center and Helios. Because the real growth engine behind all of this is the data center business. It's officially become AMD's crown jewel, and it's now making up over half of their total revenue.
The growth trajectory here is just phenomenal. We're going from $5.8 billion in Q1 to an expected $6.5 billion in Q2, representing 101% year-over-year growth. That roughly breaks down into $4 billion from their EPYC server CPUs, which, by the way, are rapidly eating Intel's lunch, and another $2.5 billion specifically coming from AI accelerators.
So this is exactly how AMD plans to dominate that accelerator space. Meet Helios. It's their first rack-scale AI system. They unveiled this at the Advancing AI 2060 conference, and the hardware specs are honestly pretty wild. 72 MI455X GPUs, 31 terabytes of unified memory, and 2.9 exaflops of compute. But here's why this actually matters to us. AMD claims this setup delivers up to 30% more tokens per dollar than NVIDIA's Rubin system. And by using an all-Ethernet, open standards architecture, it is a direct, highly calculated challenge to customers who are desperate to escape NVIDIA's vendor lock-in.
And you can feel it. The confidence coming out of AMD right now is totally palpable. CEO Lisa Su didn't mince words on stage. She called Helios, quote, simply the best AI rack in the world. I mean, that is a massive stake in the ground against their primary rival.
Let's move to Section 4 and see how this builds into billion-dollar customer wins. Because, let's be real, great hardware specs drawn up on a whiteboard are completely meaningless if the biggest players in tech aren't actually swiping their credit cards.
Well, the biggest players absolutely are buying. These are concrete billion-dollar commitments we're talking about. OpenAI has been running GPT workloads on Helios, and they're planning a massive scale deployment starting late 2026. Anthropic? They are deploying up to 2 gigawatts. Just let that sink in for a second. 2 gigawatts of AMD GPUs. Meta is actively testing Helios right now, and Core Scientific just signed an agreement for up to 2.5 gigawatts of capacity. It's huge.
But AMD isn't just out there selling hardware. They're essentially buying loyalty. See this staggering $5 billion figure? That is AMD investing directly into Anthropic. It's a really smart, strategic financial maneuver designed to cement their very own walled ecosystem right inside the foundational AI model space. All right, on to Section 5, Epic Venice and Agentic AI. So GPUs are getting all the hype, but they're only half of AMD's AI strategy. The other half relies on traditional CPUs. Now, to understand why a CPU still matters so much in the AI era, you really have to understand agentic AI. Basically, these are highly sophisticated artificial intelligence agents designed to independently execute code, call software tools, and query data directly. And guess what? Those specific workloads, they run on CPUs, not GPUs. By targeting this workload, AMD actually believes the total addressable market for server CPUs will balloon to an incredible $220 billion by 2030. And their new Epic Venice chip is custom-built to conquer this exact new market. Built on TSMC's bleeding-edge 2-nanometer process, the engineering here is just staggering. It packs 203 billion transistors, up to 256 cores and 512 threads. This immense technical superiority, particularly hitting that historic 2-nanometer milestone, is exactly what's giving AMD such incredible pricing power right now. So the crucial point is, how does this insane hardware actually translate to the balance sheet? Well, back in Q1 of 2026, Epic CPUs sold for roughly $1,500 a pop. But for these new Venice chips, Jefferies analyst Blaine Curtis is forecasting an average selling price between $3,000 and $5,000. That is a gigantic, margin-expanding step up in profitability per unit, and it's going to flow straight to AMD's bottom line. Bringing us to Section 6, Valuation worth the price. We've seen the hyper-growth, the amazing hardware, the huge customer wins. Now we have to turn to the hardest question in finance. Trading at an eye-watering 162 times trailing earnings and 54 times forward earnings, AMD stock is undeniably expensive by almost any traditional metric. But despite that massive premium price tag, Wall Street remains broadly bullish. Over the last 3 months, the analyst consensus shows 28 buys, 7 holds, and exactly 0 sells. With an average price target sitting around $580, which implies roughly a 19% upside from here, the consensus firmly views AMD as a strong buy. However, if you pull back the curtain a little bit, you'll find some really fierce division at the extremes. On the bull side, you've got UBS setting a massive $730 price target, and Benchmark is right behind them at $685. But then over on the cautious side, Morgan Stanley is holding firm with a hold rating and a much lower target of $410. This wide divergence beautifully illustrates the ongoing debate right now. Is all of this immense future growth already fully baked into today's share price? Because look, when a stock is priced for perfection, the margin for error is essentially zero. The execution risks are very real here. Any delay whatsoever in shipping those new Helios racks, any unexpected weakness in their gross margin guidance, or even just a softening of broad AI demand could send shares tumbling. The stakes for management execution have literally never been higher. AMD is undoubtedly building some incredible technology, and they're winning massive, paradigm-shifting contracts. But as a focused learner, you have to ask yourself, is all of this innovation already priced for perfection? I'll leave that for you to ponder. Remember, this explainer is strictly for educational and informational purposes only. It is absolutely not financial advice. Always do your own thorough research before making any investment decisions. Thanks so much for joining us for this deep dive, and keep learning.